Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum, a realistic price prediction for this market cycle. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. In this video, we're actually going to combine three different ways to look at Ethereum to try to identify what is a realistic price range that Ethereum could go to. Now, the reason why I'm going to give a range is because if I give a single number, then if it doesn't make it to that number, everyone's mad, right? If it goes beyond that number, everyone's also mad. So there's not really a great way to win in that scenario unless I happen to have a crystal ball and know exactly where Ethereum is going to top out. Okay. The other day, I put out a video where I just sort of spitballed $5,700. And that was from the butterfly effect pattern, right? And I thought people would be happy because I'm over here saying, look, guys, when everyone was bullish on Ethereum back at 4K over here, we were the ones saying, no, Ethereum, in order to go to all-time highs, it first has to go home, right? It first has to go home. Well, Ethereum went home. So now I think it's realistic to expect it to go to new all-time highs. Now, does that mean it's going to happen tomorrow? Probably not. Could there be a correction between now and when Ethereum breaks all-time highs? Probably. But when I look at a chart like this, it looks like it has a lot of momentum. And my base case is that it will break through 4K. And then my base case is ultimately that it will go to a new all-time high. Therefore, before we get to that, I want to just talk about what's a realistic target. Now, two things. First of all, I could be completely wrong. Maybe Ethereum tops out now, right? And I'm just completely off base. And just because I was right about it going home doesn't mean that my next view is going to be correct. I could be wrong. So we need to accept that. But I just want to go through three different ways to view the market. And also to say, look, you don't actually need to know where the top is. There is a way to navigate the market with a DCA strategy. A lot of people think about DCAing in. They never think about DCAing out as the market gets extremely heated. So, and also you're probably thinking, haven't you made a ton of Ethereum videos recently? Like 4 of my last 5 videos have been Ethereum. It's true. They have been. But I will talk about what I think is important. And what I think is important right now is to focus on Ethereum. Okay? So, the first thing that I want to mention is I threw out a price target yesterday, or sometime recently, and I got myself into trouble because I said, I think $5,700 is a reasonable place to go. And I thought people would be happy. People got mad. They're like, well, hold on a second. Can't it go beyond 5,700? And the answer is obviously it can. 5,700 for me, right? It was sort of like a conservative target, right? A target at which point it might make sense to skim some profits in case that's all we get. Because again, no one knows just how high the market will go. 5,700 came from the butterfly effect video, where there's this butterfly harmonic pattern coming from Elliott wave theory that suggests that 5,700 would be sort of like the minimum target. And the reason why I say that is because this is the butterfly harmonic, where you have X to A, B, C, and D. And from X to B, you have that 0.786, which is exactly what we got, right? Like 0.785, 0.786, basically the same thing. And the C could go as low as the 0.886, or it could be as high as the 0.382. notice that that first area the Ethereum really turned around back up here was around that 0.382 level. So that was where the Ethereum bulls first tried to break through, around the 0.382. Then they tried again around the 0.56, and then they tried again all the way down here at around the 0.83. Again, the lowest it could go, and this pattern still have some legs to stand on, would be the 0.886, okay? So, in this case, I was just spitballing, and I said, all right, well, if you take the 1.618 from B, if we get this exact, right, the 1.618, that would put Ethereum at around 5,700, give or take. But that's just one price prediction. So we're going to start off with 5,700, right? We're going to start off with that and just say that's one price target. That doesn't mean it's the only one. It's just the one at which point I'm going to, like, you know, my ears are going to perk up and I'm going to start looking around to see what's going on. You know, are people, is it too frothy? Is it not? That's the first thing I would look at. The other thing to note is that just like this can range from the 382 to the 886, B to D can range from the 1.618 to the 2.24. So the 5,700 is sort of the conservative target. If you go up to the 2.24, that would actually put Ethereum at around 7,500, right? 7,700, something like that. So let's go in and say, and let me try to get it exact, because this is B, and then here is C, right? So D at the 2.24, 7,400. So let's call it 7,500. Let's just call it 7,500 because it's close enough, right? So 7,500. Okay, is that reasonable? And we're gonna check in with something after all this to figure out if it's reasonable or not, right? I'm not just gonna leave you hanging, right? So we have 5,700 and 7,500 as realistic targets, assuming that this market structure remains intact, which so far it is. You also have, you know, up here, you have that X to D could be anywhere from the 1.272 all the way up to the 1.618. So you'll notice that D right now is a little bit above the 1.618. So if we actually match that, puts it closer to 7,300. 7,300, right? If you go all the way up to the 1.272, as measured from that one, so it's the 1.272, that would put it at around 6,000. Okay? So, we have four numbers. We have four numbers now. And what do they range from? They range from 5,700 to 7,500, with a couple of inside targets, 6,000, 7,300. Those seem reasonable to me, right? Seems like, hey, this is a realistic chance. And I think one of the reasons it seems realistic too is because everyone watching this video is probably screaming at the screen saying, why isn't he saying $10,000, right? So to me, it's reasonable. Like, it's realistic. It's not too much, right? But I mean, there's a chance we don't get there if the economy just completely collapses between now and then. But I remain hopeful that the chart is telling me everything I need to know. So that seems like a decent range. The other thing that we talked about is the pattern by the S&P 500 in 1989 to 1990. Again, roll your eyes, go complain about why I'm talking about this again. But this pattern played out perfectly, right? When I was talking about this, a lot of people were laughing and saying all sorts of stuff. But you go look at it, and you take a bar pattern, and you look at this pattern on the S&P, and then you go on over to Ethereum, and you copy it. What do you notice? Basically, the pattern matched perfectly, right? It was essentially a perfect match. Even down to, right, even down to this little drop right here, right? Even down to that little drop. So when you look at this chart, what does it suggest could happen? Right? It suggests it could go up, and depending on how long the bull market goes on for, it could, I mean, at first it could break through new all-time highs and then slowly trend up. Maybe it gets an even bigger move later on. But when I look at a chart like this, I have to keep something in mind, right? And that thing that I have to keep in mind is that, and I know this is deterministic, right? And maybe I'm wrong, but one thing I cannot forget is that every 4 years, Bitcoin goes through a bear market. Every 4 years. And the last 3 bear markets all started in the post-halving year for Bitcoin. For Ethereum, the one in 2017 actually started in 2018. But you'll notice that Bitcoin had these bear markets in 2014, 2018, and 2022. So I'm not saying it has to play out, because something has to happen in markets, but it just seems likely that we're going to have a bear market in 2026, which leaves us about 6 months, right? Especially if you include for Ethereum that it has sometimes gone on longer, it leaves you about 6 months max. Could end before that, 6 months max. So if you have 6 months, and you're overlaying this fractal, then you basically just say, well, how high was this fractal by the time you were in January of 2026 through this view? And you can see that it would have gone as high as around $5,300 by this fractal. If you take it all the way out to the next move up, it went all the way up to about 7,500. So again, it doesn't really change what we already suspect to be a realistic range, right? 5,300 to 7,500. 5,300 to 7,500. It seems like a reasonable target. Okay? So now we have to say, all right, this is great, right? Ben's, he likes doing his little dubious speculation stuff and let him go on for a little bit. But is it possible? Does the data suggest that it's possible? Not this drawing trend lines and drawing fractals, but has what Ethereum done in the past, if you incorporate diminishing returns, which we have, does it seem like that is a realistic price target? It's a great question, right? I'm glad you asked it. Let's go take a look. So this is the Ethereum risk metric. It ranges from 0 to 1, 0 being very low risk, 1 being very high risk. The current risk on Ethereum right now is 0.672. Now, I'm sure there's other Ethereum risk metrics, and I'm sure they're great. But this is mine, and this is the one that I use over here at ITC, into the Cryptoverse, all right? So, does the risk metric provide confluence to the idea that we are potentially in a rally right now to new all-time highs? Well, do you guys remember the pattern that we've talked about with Ethereum? And it's that every single time when Ethereum broke down and ETH Bitcoin started to rally, right? You have a trend line that Ethereum is holding. And then eventually it breaks down, right? Eventually, look at this here. It breaks down right here. It breaks down right here. And guess what? It broke down right here. So 3 separate times where you had a trend line. Well, and during that time, guess what? ETH Bitcoin was dropping until what? After ETH USD went home. Look at this. ETH Bitcoin was dropping. When ETH USD went home, ETH Bitcoin bottomed and then went up. Look at the next cycle. ETH Bitcoin was dropping. What happened when ETH USD went home? ETH Bitcoin bottomed and then went up. Look at this cycle, right? ETH Bitcoin was dropping while we were in this phase of ETH USD going up. Guess what happened after ETH USD went home? ETH Bitcoin bottomed, okay? But look at this. This is key. Q4 of 2016. Q4 of 2019. Q2 2025. I don't control when this stuff happens, right? I don't control what quarter Ethereum goes home. But when it does go home, you have to pay attention. Okay? So, what happened in Q4 2016 with the risk metric? Was it between, let's say, the 0.3 to 0.4 risk band? Yes, it was. That's where it hit 0.3 to 0.4 risk. December 2016, right here. What was the next one? Q4, December 2019. Ethereum went home. 0.3 to 0.4 risk. What happened again? This cycle. Ethereum went home. Where was the Ethereum risk metric? 0.3 to 0.4 risk. Okay, so all of them, it's the same, right? They're all the same. Every single time, ETH USD is trending up while ETH Bitcoin is bleeding. So Ethereum's going up, but it's only going up because Bitcoin is lifting it up. And then eventually Bitcoin drops during a time where it doesn't normally drop. This time it was Q1, Q2 of 2025, the post-halving year. Ethereum goes home, ETH Bitcoin bottoms, and then ETH USD explodes to new highs. It's all happening again. Like we've seen this before. Okay? So we can see that the Ethereum risk metric did the same thing it did in 2019, and then it did the same thing it did in 2016. And after that 2016 drop, guess what? Ethereum went to new all-time highs. After that 2019 drop, guess what? Ethereum went to new... Oh, wait, it didn't. We had one last scare, and then we went to all-time highs. Here, we're moving up. Now, it's always possible. Like, it's not my base case at this point, right? It's not my base case. It's always possible you get some type of fluke scare in the market and it sends Ethereum back down. But if it does, I think it would be very, very brief. All right? I can't say for sure that it's not going to happen. But one of the reasons why I think that rally gave out so quickly back then was because the unemployment rate just essentially skyrocketed overnight. I mean, it went from 3.5% to 15% like that. So the rally gave out well before it theoretically otherwise would have. But we live and learn. I don't think it's as likely that the unemployment rate is going to go to 15% next month. I mean, I'm not saying it can't go up. It probably will continue to slowly trend up as the quarters go on. But I don't think it's going to go to 15% like that. Which if it's not, then hopefully this rally has a little bit more legs than this one had over here. Okay? Now, in a scenario, if we're sitting here in 2 to 3 months and we're at a much lower price, like if the valuation gets cut in half and we're back at home, just know I don't really think that's going to happen, honestly. But if it does happen, I think it would honestly be a great opportunity. Again, just like this one was a great opportunity. But let's assume that doesn't happen. Let's just assume that we are in this rally right here and that we don't immediately have to deal with the consequences of an economic recession. All right? How high could the price go? Well, let's go through here and see how high we went. Did we go to 0.4 to 0.5 risk in 2017 and 2020? We did. Did we go to 0.5 to 0.6? We did, right? In both cases. And that's where we are. No, we're even above that. We're already at 0.6 to 0.7. So we are already at a higher risk level than what we got before that pandemic crash. But we haven't gone to a higher risk level as to where we saw in 2017. I think what's going to happen is that we're going to continue to go higher than where we were before the pandemic crash, but we won't see it go as much up as we did in 2017, 2018 because of diminishing returns. All right. So then You look at 0.7 to 0.8. We're not there yet. 0.8 to 0.9, 0.9 to 1. So then what we do is we can look at all of it together, and you can see how in Q4 2016 we had that light blue before going up. In Q4 2019 we had that light blue before going up, and again in Q2 of 2025 that light blue right here before going up. Now let's take the color out and just look at it quantitatively, where the risk metric is on the secondary y-axis. You can see where the risk metric is right now, 0.673. 0.7 to 0.8. Is that possible? Yeah, it's possible. One thing I want to say. There is a chance that we do not go to 0.9 to 1 risk. We could go there. We did go there last cycle, right? We did see that last cycle very, very briefly. Very briefly. But it did technically go there. But let's look at 0.7 to 0.8. Now, I need to tell you guys, this stuff is dynamic. It's going to change. This is just basically what is the 0.7 to 0.8 risk band today. But what it is today is going to be very different what it's going to be in September and November and January, right? So it's going to change. It is dynamic. All right? So let's go take a look. So we're going to go over here. We have the screener, and we're going to click on Ethereum. And we're going to see what 0.7 risk corresponds to. Interestingly enough, 0.7 risk corresponds to basically the range highs that we've been struggling to break through. The range highs. Okay? So what I think is that it will break through with probably some consolidation beforehand. I'm not saying that you can't see a pullback. In fact, you know, if you look if you look at Ethereum on, let's say, like the daily, right? Like the daily, it is getting pretty heated, right? Like, so like while I expect it to go higher, I'm also like, well, at some point we probably are going to see a little bit of a pullback here. If you look at like the daily RSI, it's getting pretty hot. Okay? It's getting pretty hot. So, you know, what could happen, what I could foresee happening with a video like this, like everyone's gonna be like, oh, well, Ben said it could go here. They all jump in and buy, and then we get a correction. They're like, oh, Ben was wrong. They sell, and then we see another move up later on. So keep in mind that it's not impossible for us to see a pullback at some point in the coming 1 to 2 weeks, because, you know, it kind of correspond to some of these other pullbacks that we got. When the daily RSI reached this level. Now, some of the times you got a little bit of a pullback and then Ethereum still went higher, which is probably what would happen, kind of like what happened the last couple of times. You got a pullback and then it still went higher, even over here. And then eventually you saw a larger drop back down, okay? But there's more momentum this time. So when you look at the screener here, 0.7 risk is 4K, 4,100. 0.8 risk is 5,600. So do you guys remember when I said 5,700? That's basically the 0.8 risk level. Now, if you look at historical risk levels for Ethereum, you can see there's not that many times in history when it goes above 0.8 risk, right? There's really not. In fact, if you go to the time that Ethereum spends in its risk bands, out of all the days that it's had, it's only spent 151 days in the 0.8 to 0.9 risk band. In terms of percentage, it's only spent 4.15% of its time in the 0.8 to 0.9 risk band. It's only spent 1.05% of its time in the 0.9 to 1 risk band. So for every 99 days that Ethereum is around, for every 100 days Ethereum's around, only one of those days it's actually in the highest risk band, on average, over the cycles. So when you look at a target like, say, 5,700, just know that 5,700 more or less corresponds to 0.8 risk. So, right, that's around 5,700. What is 0.85 risk? Let's go take a look. 0.8. And again, this is going to change. It's going to be different in a few months. What is 0.85 risk? That would be 6,600. That's 0.85. So let's go write that down. So now we have 6,600 6,600 for 0.85. What would 0.9 risk be in this case? 7,700. 7,700. So if you go put that down, you have, whoops, 7,700. So are the numbers we came up with earlier, are they realistic, right? Are they realistic? The 5,300 to 7,500, right? The 5,300 was from one of the other fractals, or from one of the other ways to measure the butterfly effect. But really, that's the range, right? 53 all the way up to 7,500. The 53 is like the real low end. Like if it only just barely breaks the all-time highs, and then all hell breaks loose. If we can have a little bit of time above the all-time highs, then you could see 7,500. And both of those numbers are realistic based on what we've previously seen, right? They're realistic based on historical context. Okay? Now, what is the 0.95 risk level? Well, that's 9,000, right? So let's go look. 0.95 risk is around 9,000. I gotta be honest with you. If we're at 9,000 later this year, I'm gonna be running for the hills. Okay? Like, I don't think it's gonna go much higher than that. And of course, you have everyone that's gonna be like, well, look, technically speaking, one risk is 10,000. So it's technically possible. But I don't know if it will go that high, right? I don't know. Again, if you go look at historical risk levels for Ethereum, while it made it to the 0.9 to 1 risk band last cycle, it only barely got up there. And there are times where it only rallies to like the 0.8 to 0.9 risk band, right? So then how can we use this, right? Like if no one actually knows where the top is, you have influencer A telling you that Ethereum's the worst thing ever, that it's just going to go to zero. You have Ethereum or influencer B saying that it's just going to keep going up forever. You have, some people saying that it's probably just going to get rejected off 4K. You got other people saying it's going to go to 10K. Well, what do you do? Right? What do you do? Well, what I do is I tune out the noise because I don't care about all these price predictions, right? I don't really care about my own either. I mean, price predictions are a dime a dozen, right? Everyone can throw out a price prediction. They mean absolutely nothing. What I would say, what I think makes the most amount of sense. Let's say you have your entire Ethereum stack right now. Let's say you've got it all and you're enjoying this. You're living life, you're living the high life right now because you're watching Ethereum pump basically every single day. What you could do is you could sell a portion of it at each wristband, but you sell increasing amounts the higher the risk goes. Okay, so for instance, let's just say you think there's a risk that Ethereum tops out at 4K, right? And that like this is it, and that we're gonna have a quadruple top, even if that's, I don't know, who the hell knows if that's even a thing, right? But we're gonna have a quadruple top and 4K is that's it, and it's going down. If you think that there is a chance that could happen, then it could mean taking some profits before then, but it would only mean, if you want to follow the dynamic DCA approach, only 1/10 of your stack. 1/10. That way, if you sell 10% and Ethereum gets rejected off 4K, you're going to be walking around feeling like a king. Because then you're like, well, hey, at least I sold something so that I can get back in. But if it doesn't get rejected and it just keeps on going up, you're going to feel a little bad that you sold that Ethereum. You'll feel a little bad, let's be honest, right? You'll feel a little bad. But you'll also know you still have 90% of your position, right? And you have to forgive yourself for not being able to predict the future, okay? And then, if in a few weeks or whenever, if tomorrow, right, who knows, if we're at the 0.7 to 0.8 risk band, 0.7 to 0.8, then you sell 2/10 of it. 2/10. That way, if 0.8 risk ends up being the top. Or let's say you're in the middle, right? Let's say you do it at 0.75, right? So again, 0.75 is 4,800. That's the prior all-time high. That works out somewhat conveniently if it just goes to the prior all-time high and that's it. Let's say you do 1/10, around the current prices, and then you do 2/10 at 4,800. Then you've sold 3/10. You've got 70. You still have 70% of your position, so you're locked and loaded, ready to go. But if there's a pullback, you took some profits, you can always buy back in. But let's say you sell 3/10 by that point, and Ethereum just keeps on going up. And then let's say it goes to that $5,700 level. Or even let's say it goes all the way up to, say, 7,500. And it's in the 0.8 to 0.9 risk band. What that would mean, if you follow the dynamic DCA approach, would be selling 3/10 of that original position. Not of the current one, but of the original one. So now, you would have sold 1/10 plus 2/10 plus 3/10. You would have sold 6/10 or 3/5 or 60% of your Ethereum position by the time it hits $7,500. So that if that ends up being the top, you sold 70% of your position, and you're going to keep the 30% as a hodl stack in case the unforeseeable happens and it just keeps on going up to 9 or 10K. All right. And then if the stars align and we reach the sea of tranquility at one risk, you sell the rest of it, you get out, you go enjoy 2026 on the beach somewhere, and I'll see you at the end of 2026. That, I think, is how this can be navigated, right? 1/10, 2/10, 3/10, 4/10. That gets you from here to whatever the market cycle peak is. It allows you to sell a little bit along the way in case any point ends up being a top. Maybe you sell a little bit and it's not the top, but you get a 20% pullback. That might feel kind of nice, right? So one of the nice things about dynamically selling as it goes up is that you're not as emotionally invested in the up-only view, right? Because if it keeps on going up, or if let's say you don't sell any, and then one morning you wake up and it's down 40% or something because something really bad happened, you might panic sell. But if you had already sold into strength and you have some cash, then you can use that cash to then buy that dip. That's the idea, right? You sell into strength, not into weakness. And that's what a lot of people got in trouble back in April when Ethereum went home. A lot of people capitulated. And you might say, well, it wasn't you. Well, it was someone. Ethereum didn't go to $1,300 because no one sold. Someone was selling. It wasn't me. I told you guys that was the time to buy when Ethereum went home. But for me, I think a realistic range is 5,700 to 7,500. That's what I think a realistic range is. I think in a perfect scenario, it could potentially go higher, but that's honestly not my base case right now. But I'll let you know if that changes. If the butterfly effect view is right, then it would go as high as 7,500, maybe a couple $100 higher, right? But it would go as high as that before we get the 2026 bear market. So for me, this would conclude this video. Ethereum, a realistic price prediction for this market cycle. I hope some of this stuff pans out. I hope we don't just go into a sort of like a pandemic style crash between now and then. In a worst case scenario, if that happens, you can't live your life worrying about something like that. If it happens, you take advantage of it, and you just keep on going on. But even if that happens, I still think Ethereum would recover and continue to go up. But hopefully we can just see Ethereum break on higher to new all-time highs as the months go on. The last thing I'll say is that, historically, there usually is a correction by the market around the August to September timeframe. I can't guarantee that's going to happen this time. I mean, if you look at 2017, if you look at 2017, you can see there was a little bit of a correction right there by Ethereum in September. There was also one in June, and we didn't really get that this time, right? I guess we did. We got a little one in June, right? So there was one in June, and then there was another one in September. So there's a chance here that Ethereum, goes up and then it gets that September drop. and then maybe it gets, you know, one final push. I don't know. I mean, there's also the chance that it just melts up into Q3 as well. But which, I mean, I think for now is what's happening, right? I mean, for now you are getting this melt up into Q3. But that's what I would say, guys. 5,700 to 7,500, realistic. Could it go higher? Yes, but I would say it's risky, right? It's risky. Like if you bought Ethereum at 1,300 and it's at like, if it's at like 7K, 8K, just know that at that point, I don't know how much higher it could realistically go. One thing to remember, these numbers are going to change a little bit. Now, the S&P fractal numbers won't change. The butterfly effect video won't change. The risk metric will slightly change some. So a little bit later on this year, you know, 0.8 risk could correspond to a slightly higher price than 5,700, right? Maybe it would correspond to, or sorry, maybe it would correspond to 6,000 by, you know, a few months from now, right? It's going to change a little bit because these numbers are dynamic. They react to current price action. But I think that what's going to happen is the path we laid out long ago, down to the regression band, up to new all-time highs, and then down into the 2026 bear market, and then we'll continue on. And what I think is ultimately going to happen, just to provide a larger view, I think we're repeating this. So if you look at the last cycle, we spent a lot of time in the regression band, but the cycle before that, we didn't. This cycle, we didn't. So next cycle, I think we're going to spend more time in the regression band, right? But that doesn't mean you can't go up to new all-time highs first. Well, that was a little bit too high, right? It doesn't mean you can't go up to new all-time highs first, come back down, and then continue to build off of that level, and we go on our merry way. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.